Hi, this is Zach from Zach's Traders Cafe with a look at the major markets on Friday, the 2nd of September. We're in the run-up to the non-farm payrolls for August, so things a little bit distorted perhaps. As far as the FTSE is concerned, it's broken support or notional support. You would have thought it wouldn't have really fallen much below 6,800, 6,780. Next level down is 66.81, the 50-day moving average. RSI has fallen below neutral 50, which is a sell signal on that basis. There is a line of support there from July, which presumably is the only major thing for bulls to hang their hat on at the moment. Likelihood is that we're seeing a flush out ahead of a new leg to the upside, but the problem here is that an end of day close back below the 50-day moving average, 66.81, really would indicate we've got a broadening top sell-off there, and one would have to assume at least a period of consolidation and a retracement back down towards 6,400 to 6,500 over the next couple of weeks. But at the moment, probably one still has to give the benefit of the doubt to the upside. The ideal scenario really for Friday is that we see an end-of-day close back above the 10-day moving average of 68.26, which would then take us on to 7,000 and keep the rally alive. On to the DAX, and here we can see that it's all about 10,500. We've seen that come in several times over the last few sessions. Uptrend line there from June as well, multi-tested over the near term, so that doesn't imply that we're just in a holding pattern ahead of a new leg to the upside, and 11,000 plus. At this stage, really only back below 10,400, the last lows here, 10,440, would really question the ongoing push to the upside, especially given the way that we've held that gap down to 10,374 from the beginning of August. Onto the US markets, and bounce off the 50-day moving average for the Dow. Yesterday, another hammer candle there, so really showing that the buyers are ready to get involved, or are already involved in terms of propping this market up. So really, yesterday's low key around the 10,000, rather the 18,300 level. And while we're above that on an end-of-day close basis, buy on the dips and look for 19,000 plus as a new leg to the upside. For the S&P, similar picture to the Dow, that much more bullish in the sense that we've had the two hammer candles, but there's no need, or there has been no need to test the 50-day moving average at 21.51. That might be tested today at some point, but one would expect the buyers to come in and then propel this market up to 2,200. Would be very surprising if there was any other scenario on tap for later today. Nasdaq also bouncing off notional support towards the 4750 area. In fact, 4750.24 yesterday's low, which was expected. 4749.09 the floor of the August gap. So really, this market behaving itself in a technical way. In fact, the gap still stands, so this is notionally still an ultra bullish situation. Target towards 5,000, and once the 48.30 to 40 resistance is cleared. Onto the currencies, and cable still trying to prove that the interest rate cut last month was a wrong move there, pushing well above the 50-day moving average at 131.44, and suggesting that the next move here will be for rates to go back up again, at least while we're above the 50-day line, 131.44, looking for a retest of 135 plus over the next few sessions. RSI actually back above the neutral 50 level, 55, also a leading indicator on future upside. As for the euro, basically about the 50 and 200-day moving averages, 50-day line 111.34, 200-day moving average 111.24, and really while we're above those two features, this is a buy on dips rather than a sell into strength. Proper evidence of a new leg to the upside would be from an end-of-day close above the 10-day moving average at 112.24, and that would then target the 114 zone again. Dollar yen still pushing higher with the retreat from the 100 yen level. 102.66 is the 50-day moving average, and while we're above that, still looking for 105, 106 plus over the next few sessions. Finishing off with gold, hopefully this metal has finally found support. There's a uptrend line there from May running towards 1300. Still can't quite believe that there won't be at least an initial probe below 1300 just to stop out the weaker bulls, but as things stand, still in a constructive phase and buying what was previously old resistance. Only back below 1280 would cancel the prospect of at least a retest of the 1350 resistance zone and resistance line from July. That's it from me. More updates at the same time on Monday.